Hello and welcome to the Theo Night Report for Monday, September 26th. My name is Doc Severson. I'd like to start out tonight's report by talking to you for a couple of minutes about the subject of context when it comes to trading the charts. So in other words, let's say that we're looking to day trade the NASDAQ futures here. We have a 275 tick chart coming up, and we've identified the opening range, and we're looking to trade against this. Whether or not we're going to be long or short, again, that's the purpose of trading futures. Well, if you're fairly new to this and if you don't understand the concept of context, then it's going to be really frustrating because you're going to see the price initially go down, you're going to get bearish and then be surprised when the price goes back up again, and then you're going to turn and flip bullish and then be surprised as the price goes back down again, and again be confused when the price rallies from that point. Again, if you just look at this price action within the context of today, you're going to be kind of missing the point and you're going to be whipsawed back and forth continually. Now we can get this sense of context in a couple of different ways. The first way that we can understand this is through what we call the fractal energy indicator, which in this case is the yellow study that's down here, the yellow study that's embedded within this larger RSI Laguerre study. Right, so what does this give us? If you understand how price moves, generally what we're seeing is no longer this sort of sense of overbought and oversold anymore. What we're seeing instead is that the price will run. So we'll get a sense of range expansion, and then the price will move into range contraction. And that range contraction actually may be a movement in the opposite direction. And from there, that range contraction will just wind up the spring again until the price is ready to trend again. And then we get into range expansion again, or perhaps in the opposite direction. So the way that we can use that context on this chart is through this yellow line, this embedded fractal energy, with a high value, so a value above this level here, meaning that the price has essentially gone sideways or is gone into range contraction, which we can see like right there with this high value. So we understand the context here is that the price is consolidating and likely to start trending again. Which direction is that going to go? Well, this is where we can use our different other indicators for, or we can simply use price action as we see the price break out above that range, put in a higher high, a higher low, and then it's off to the races. Now, by the same token, we can also see a different form of context as this range expansion starts to really build up strength to the upside. What we have on a very low value down here in the embedded fractal is that we have an exhaustion signal. So all of a sudden when we exhaust, we expect the price to go either sideways or somewhere down until it's built up enough energy again, until it once again hits exhaustion up here, and then the price either has to go sideways or go to the downside. Now, we can also see this sense of context in the move to the downside here as this range expansion to the downside leads to another range contraction zone around here as the price has to build up enough energy for the next move. So just within a single time frame, we can get a better sense of context as to whether or not the price is in the period of range expansion or range contraction and what's likely to occur next from there. So that alone, just on the single time frame, is a big help. Now, if you know us, we like to kick things up a notch, and this is why on a different screen, what I have is a whole different set of context here. So if you look at this, what I've got is an entire workspace here with the daily chart over here. This chart is actually 25 times larger. So I go by a factor of 5, 25 times larger than this chart that was over here that we were just looking at, the signal chart. So this is what I call an anchor chart. So that's an anchor chart. And you can see within that, the context of the smaller time frame chart, we have this larger time frame downtrend. You can also see within this range expansion move to the downside, what did we do? We hit an exhaustion level down here. So perhaps you can start to see how the puzzle pieces sort of fit together when you understand not only the context at a single time frame, but when you're also leveraging other time frames, like understanding that the daily chart is still in an uptrend here, but within that uptrend we can have pullbacks, such as this smaller time frame, which is actually 25 times larger than the actual day trading chart that I'm taking signals off of. So a larger time frame chart like this will override anything on the smaller tick chart that I have. So a move to the downside, which creates exhaustion down here, is more than likely going to create some type of range contraction, consolidation in this level. I should expect to see very volatile up and down sideways price action within this range until we see the chart at this level start to recharge itself and get ready for the next trending move, whether or not that's to the upside or to the downside. So as you can maybe see here, a sense of context about what the larger time frames are doing or what's happening in the bigger picture can be a huge asset if we're narrowing our focus in to actually taking day trading trades. Now you can also take the same principle and expand it if you're looking to take trades off of the daily time frame in this case, maybe the daily time frame. Then what you're going to want to do is to look at a larger time frame like a weekly or maybe even a monthly and trade in that direction so that you're not going against the current of the larger time frames. So as you can see, this sense of context is sort of pervasive against everything that I do within trading, regardless of the style, the technique, or the actual time frame that I'm taking trades off of. So let's go ahead and expand this out to the S&P 500. In this chart, I have the daily, weekly, and the monthly charts. Again, I believe in this sort of factor of 5 between the different time frames. It spaces them out nicely, and you can see the patterns within the patterns. So in other words, I can see smaller time frame patterns in the daily chart that appear to be just swings on the weekly chart. And the same thing goes for the weekly swings that fit into these much larger swings on the monthly chart. So if we carry that same concept over to this chart, if I start with a top-down analysis, which is the way I like to do these things, because the larger time frames dominate the trend. We can see that right now we have a monthly chart which is dominating the trend and is to the upside. Now, what we've seen over the last 2 years is basically sideways price action that's fit within this range here. And what that's done is build up a tremendous amount of energy. So the context behind the monthly chart is still an uptrend. So I know that's a disappointment to many bears out there, but right now we can't fight the monthly trend. Now, the second rule that I have with price action is that reversals start from the inside out. So if we move all the way over here to the daily chart, if we can start to look for reversals here in that trend, this might be, and I emphasize the word might be, a lower high setting up, which could be a reversal starting at the daily chart. So the way that that would propagate is if this actually did start to work down from here as a downtrend or a change in polarity to the downside here, which would reverse all of this sideways and uptrend here, then the way that we'd see that manifest itself is that these reversals propagate to the larger time frames. So what that would mean is that we'd start to see the weekly chart pulling down. We'd eventually wait for some type of bounce back up. Now, whether or not that creates a lower high there or keeps on going and forms a higher high, we don't know the answer to that yet, right? So this is why we typically set in, frame in the price action around these kind of moves. And that way we understand if the price continues lower through there, we're going to be bearish. If the price breaks out through there, we're going to be bullish. So speaking of context, also we can look at the indicator down here and the embedded fractal energy and understand that we just saw a very extended move to the upside, especially after the Brexit move. And so right now the weekly chart is taking a pause. And so it's starting to build up energy again. And we're going to be in the condition here fairly soon with all 3 time frames that are fully consolidated, have a ton of energy, and are going to be looking for a direction in which to move. So I'm doing this analysis a little bit early. The market still has another couple of hours to trade yet today, and then who knows what's going to happen with tonight's debate and whether the market's going to react in a positive or negative fashion based on certainty or uncertainty coming into the market after that point. So just a reminder though, check your email because I am giving a quick class on Tuesday evening. So Tuesday evening at 8 o'clock Eastern time. I'm going to be giving a class on how to use this lower indicator with the RSI Laguerre with the embedded fractal energy study into it. So it's free. If you attend the class, you can get the indicator for free, and I'll spend an hour and show you how to use this. So thanks for listening. Hope to see you Tuesday night. Take care.